All right, welcome everybody to CGI Forex course. So this is a wholesome material that's going to cover everything about trading. And the first thing we're going to be looking at today, is now. Let me give you a peripheral of how what the course covers. Now there are 6 chapters. There's chapter 1, part 1. There's chapter 1, part 2. There's reversal. There's psychology. And there's other strategies. So this is 1, 2, 3, 4, 5. Then there is challenge. So in this course, in this video, we're going to cover every one of this. So we'll start with chapter 1, part 1. Chapter 1, part 1. All right, chapter 1, part 1, Forex trading seminar. Now, you will get this slide at the end of this course, so you can read most of those basic things for yourself. So the first thing you have here is history of Forex trading. You can bore yourself with that information later. So transaction, what's transaction? We all know what transaction is. Market, we all know what the market is. Now, before I explain, there's something very important I need to talk about. There are 5 major financial markets. We have the Forex market. We have the stock market. We have the derivative market. We have the futures market. And then we have the metals or commodities market. Now someone will ask, what about the crypto market? The crypto market is not a major market. It falls under what we call minor markets. But these are the 5 major financial markets. There are 3 stages of a market. There is the what we call babyhood stage of a market, the adolescent stage, and then matured stage. Now, the reason, based on my research, why these markets are they call them major markets is because they are matured. Do you understand? A lot of investors are on this market. Now, the crypto market is still at the babyhood stage, so it's not a matured market. So, the Forex market is the market for buying and selling of currencies. So the market for buying and selling of currencies is called the Forex market. The stock market is the market for buying and selling of things like stocks, shares. All right. Now, I don't know how many of us have heard of the IPO. IPO means initial public offering. So let's say, for example, XYZ company, you guys maybe manufacture paint, and you guys get big to the point that you want the public to have a share of your company. You give what is called an IPO, initial public offering. So you're giving the public the opportunity to own a percentage of your company. So derivative and futures market is the market of buying and selling of things like bonds, risk, liabilities. Now the metals and commodities market is the market of selling things like metals, commodities, things like gold. XAU is gold. All right. XAG is silver. Brent is crude oil. So things like this fall under the commodities and metals market. All right. Now to our slide. Not this one yet. This. All right. Properties governing Forex. Now there are certain properties that govern Forex. For some time, I'm just going to talk. I won't type so that I'm fast. The properties that govern Forex Now, of course, the market is always open 24 hours. The market does not sleep. The market is the market. So no matter what you're doing, there is always going to be the market. Now, there's something called the broker. The broker is the middleman between the trader and the market. Now, there's been an underlying question: is why is the broker needed? Why is the broker needed? Now, something very important you need to understand is that on the Forex market, on a daily basis, 6.4 trillion is traded on a daily basis in the Forex market. Now, the broker, as I said, is the middleman between the trader and the market. So you have the trader, who is the middle, and then you have the market. Now, the underlying question people have asked is, why do we need the broker? You can actually trade any market without a broker. You can trade any market without a broker. Now, the reason the broker is needed is because of something called leverage. All right. So leverage is that leveling field that the broker provides every trader. Do you understand? Or provides the traders that are on its platform. Now, imagine if 5 people want to buy, let's say 2 people want to buy a car. All right. Welcome. Okay. Now, today we're going to be talking about the setup of the MT4. Now, the first thing you need to do is you need to download your MetaTrader 4. So what I would advise is go on Eagle FX, because they actually have a better MT4. So go on Eagle FX, click on platforms, sign up. Now, when you're done signing up, you can download the MetaTrader 4 from Eagle FX. Then also, to get a demo account, go on IC Markets, because our official broker, which is Infinex, doesn't have a demo account. They use just live accounts. So you open client area. You can use IC Markets. So you click on open a demo account. Voila. And then you write the necessary details. Now, once you're done with this, so for example, I can write John. Oh, let me just create something. I don't know if this is. Let's hold on. Alright, so once you're done with that, you use raw spread, because standard accounts are accounts that have higher spreads. So accounts that have at least $10 million and above are standard accounts. Leverage 1:100 is okay. So you can click on proceed. Now, once you do this, you will receive an email. Alright. Now, that information on your email is what you're going to use to log in on your MT4. So the information on your email, you will use it to log in on your MT4. Are we there? Alright, I don't know what's going on here. Now, once you get that information, you come to open an account. You select your server name. So you can, if you don't have a server name, you come down and you click add a new broker or server.
So you can find your details here. Now, once you do this, it moves to existing accounts. So for example, if you select existing trade account, you write your details, your login and your password, and you finish. And that's it. It will make a sound. So once it makes that sound, it means you are logged in. And then you would see your bar showing here that you're logged in. Okay. On file, you have new charts. These are various charts. Now we have five types of what do you call it now? Markets. You have major pairs, four types of pairs: major pairs, minor pairs, abnormal pairs, and inferior pairs. All right. Major pairs are pairs that are popular and used by many people. Minor pairs are pairs that are not that popular, or they are popular but not too popular, but they are not used by many people. For example, the New Zealand dollar is a popular pair, but it's not used by many people. The euro is a popular pair and is used by many people, so it's a minor pair. So you have inferior pairs. Inferior pairs, on the other hand, are pairs that are not popular and are not used by many people. Example is the Turkish lira, the TL. It's not popular, it's not used by many people. Then abnormal pairs are pairs that are not in the FX index, right? Things like the NAIRA and the rest. So you have new charts, you have your open account, MQL5 community. You can come to your view, your status bar. Always make sure your toolbars are checked, your status bar are checked, your chart bar is checked. So new orders, then help, and you have all of that. All right. So let's say we're opening this chart, USD CHF. All right. Good day, everybody. So this is part 2 of our class, and we'll just be breaking down a few things, and we'll be looking at a couple of things. Now, just right ahead, we'll go into what we're supposed to cover. Sorry for the background sound. So, first of all, I said everybody should. I talked about the different time zones, the New York session, London session, the Asian session. Talked about pre-volume, volume, and post-volume periods. And then I also said everyone should open an account with Infinix. So at the end of below this class, there's a link for our video. There's a link for the video that you would use to create your account. So the next thing we're going to be looking at is the 5 types of analysis. So we talked about indicator analysis, trend analysis. I said we'll also talk about cross rates analysis, strategy analysis, candlestick analysis. So right now we're going to be looking first of all at indicator analysis. So we have 2 indicators we'll be looking at: the moving average and the RSI. The moving average and the RSI. So let's start with the moving average, and then we'll move to the RSI. I come to my MT4. Hopefully you have set up your MT4 account, downloaded it from the website. So I give a simple system of how I trade. First of all, before I look at the market entirely, I want to know what is going on generally in the news scope of things. So I come to fxstreet.com. I click on economic calendar. Okay, my internet is a little bit acting out right now. So, economic calendar. It's taking so long to load. Anyways, but let's say if right there, what I have on my economic calendar is I have, let's say, many news on euros. All right. So I'll be looking at euros within that time frame. Okay, so if I'm looking at euros, let's say I'm looking at euro USD. So the first thing I want to look out for is I want to come to H4. On H4, I'm looking at the whole market. Now, we are starting with indicator analysis. So we'll look at the first indicator. I said for the essence of this class, we'll learn about only 2 indicators because I don't want to bore you with so many indicators that are not very productive. So we'll be looking at the moving average first of all. So I come to oscillators. Okay, trend, shipping trend. So moving average. So the first thing I'm looking at is the 13 cross 50. 13 cross 50. So on parameters, you put 13. M is simple, you change it to exponential. Your apply to should be on close. So apply to on close, I click OK. And then I come to insert again. I come to trend. I come to moving average. And then 50. I change it to 50. And then I change the color. And then that's it. So you have 13, you have 50. The yellow is 30, the blue is 50. So on H4, now, how's the idea of 13 cross 50? Now, the market is made up of ranges and trends. So within a range, the market is unsure of its direction. Either the market is going to go up or it's going to come down. So what do I mean by this? So let me use a smaller time frame. So for example, this is a range. This is a range. This is a range. So price went up, came down, went up, came down, went up. It's a range. This is a range. Now this is a trend. This is yet another range. This is a trend. This is a range. And this is a trend. So as I said, the market is made up of ranges and trends. So either a range is where the price is bouncing up a certain, some people like to call it support, resistance. I call it uplines and downlines. So this is like an upline, this is a downline. So prices are bouncing up, coming down, bouncing up, coming down. So alright guys, welcome. Now today we're going to be looking at something. We're going to be looking at systems of trading. Then hopefully we can touch money maker, understanding analysis, and psychology part 1. Alright, so we'll start with systems of trading. Now some important materials will be sent to you during the course of this course, and you should go through those materials as well as the videos. Alright, now we've already talked about the MT4. talked about the MT4 and things like that. Now, we introduced an indicator, we introduced the RSI, we also introduced the moving average. Now, what we're going to talk about today is systems of trading. Now, the first thing you need to understand is the market is simply a graph. So we have a y-axis, which includes the price. And then we have an x-axis, which includes the months, the days. So just like in secondary school, when you had a graph, you had x-axis, you had y-axis. That's the same thing. Now, if you remember in secondary school, they talked about the high of the graph and the low of the graph. Now, every graph has the highest point and the lowest point. There is the highest point of a graph and there is the lowest point of the graph. So, for example, now I'm looking at USD CHF. What's the highest point of this graph? This place. Right? Take an horizontal line and mark this place. Now, understanding how candlesticks are is very, very important. There is always the open price of a candlestick, the close price of a candlestick, the high price and the low price. The most important price at every point in time is the close price. So, for example, marking this point is very important. So this is the high, the close of this. If we're going to say this is the high point, or you can use this, but I'll mark here. So that's the highest point of this graph, and this is the lowest point of this graph. So this is a weekly time frame. This is a monthly time frame. So if you see on a monthly time frame, the highest point on the weekly time frame and the lowest point is different. And if I come to a daily time frame, you would see chances that you can't even see the highest point from the daily time frame. If I come to the H4, you can't see anything. Why? Because now something I need to show you is this. Let's mark this candle. For example, let's mark this candle. Let's mark this candle. Now this is a daily time frame. Daily time frame. So if I mark this candle and I come to H4, let's count what has happened. 1, 2, 3, 4, 5. Now, why is it 5? 1, 2, 3, 4, 5. Why is it 5? Because on H4, it is each candle is 4 hours. So this is 4, 4, 4, 4, 4. So 1, 2, 3, 4, 5. That means what has formed is 20 hours. And what time are we right now? We are at 4:49. Do you understand? So let's say 5 o'clock. We're at 5 o'clock. How many more hours before the day is over? That is no. How many more hours before the day is over? If this is 5 o'clock, the day closes by 8 o'clock, by 10 o'clock, or by 12 o'clock, because this is 5. We're saying this is 5, so we have 7 more hours. So how many candles will form 1 hour? How many candles will form 1 day? How many H4 candles will form 1 day? 6 4 hours candles. So we would have 1, 2, 3, 4, 5. Now this 5th one has not finished. It's going to finish around 8 o'clock, which will be 6 o'clock. Now on this what do you call it now? On this broker, we're using IC Market. It is 2 hours ahead of your current time if you're in Nigeria, depending on what country you are. So you have to understand what time your broker is working. So for this, it is 2 hours ahead of my current time. You can see here, my current time is 2:50. So let's say 3 o'clock, basically. So the time here will be, if you come to 15 minutes time frame, you can see it. The time here is, you can see that the exact formation is about 4:50. Yeah, it's from now. Yeah, 4:50. Yeah. So the time is 2 hours ahead. So 4 candles on H4 forms 1 candle on daily, or 6 candles on H4 form 1 candle because 4 times 6
624.
is 24. So how many candles of H4 will now form? How many candles are there in H1?
24.
Yes, 24. So we will have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So we would have 7 hours of candles, 7 more candles here, 7 more candles here that will now determine how the day was. Now, on M30, how many candles?
That will be 48.
Yes, 48. 1, 2. All right. Yeah, we're talking about pair correlation, and I talked about AUD NZD. So read this. I wrote Australian dollar and New Zealand dollar correlation. Similarly, Australian dollar and New Zealand have a close relationship to gold prices and oil prices. Why the correlation, positive or negative, can be significant if Forex traders want to profit from them. There's a lot of articles you can read about correlation, understanding the correlation of. There are people that actually only trade AUD NZD. There are people that trade AUD NZD. There are people. There's also a correlation with Singapore. Yeah, I remember another one. There is another correlation, CGD, that's Singapore dollar, and NZD. And then also with AUD as well. So those are people that use cross rates. They use cross rate analysis. Now in trading, what I would advise is use what works for you. Do you understand? Get a system, stick to it, apply it. Don't jump from one system to the other, because then you cannot know how profitable your system is. If on Monday you're trading a different system, on Tuesday you're trading a different system, or Wednesday you're trading a different system, you have issues. Have one system of trading. There is what I call the 5-3-1 rule. It's a popular rule that is known. Well, it means look for 5 pairs, three entry time frames, and one system. So look for 5 pairs, work on those 5 pairs, stick on those 5 pairs for 5 months, have 3 entry time frames. What do I mean? Maybe 15 minutes, 30 minutes, 1 hour, or H4, and then have one system. So that's the 5-3-1 rule. Alright. The next system of analysis is strategy analysis. So strategy analysis, how does strategy analysis work? There are different types of strategies. Now, a popular one I used to use before is the reversal strategy, which I may or may not talk about during the course of this class if I may not see it as useful. I used to also use the Elliott wave. And then there's one we call sniper entry strategy. There is one called highs and lows strategies. High and lows. There's what we call change in direction strategy. I think it's called cop and something strategy. So each time the market gets to a particular region, they sell it. They do the opposite of what the market is doing and things like that. So there are different strategies. Trust me, different strategies. It's crazy the amount of information you would get. And the interesting part of it is that people are making up their own strategies every day. So you can come up with a strategy tomorrow and you call it your name, publish a book, put it out there and make millions. Does it work? Alright, so down this slide, I explain about the reversal strategy, how the reversal strategy works, what is a leg, basic rules, entries, things like that, price action. But I'm going to jump that and I'll come to price action and entry point. Now, price action is very important, entry point is very important. Now, the most challenging thing in trading is something called entry points. Knowing when to enter. Now, as you grow in Forex, as you go in trading, the first thing that becomes easier for you is direction. If at where you are, your direction is always wrong, you have a problem. You have a big problem. If you have wrong direction, you have a big problem. So what do I mean by this? If you enter a trade and immediately you enter the trade, instead of maybe you enter the buy and immediately it sells, stop trading immediately. It sells drastically, sells, and it continues selling and selling and selling. Hit your stop loss, keep selling. It means, okay, if you enter the first time, it happens, enter the second time. If you enter 5 trades, and out of those 5 trades, you couldn't get a single direction of those 5 trades, you have a problem. But if you enter a trade and it hits your stop loss, but it pushes up in your direction, it means you have an entry point problem. You enter 5 trades, it hits, or you go out because of psychology, because of fear of losing, or because you put in too much money on that particular trade, or there are many factors that make people leave a trade. Because you are afraid, because of you don't have enough money, so many things that make you exit a trade. So many things. You are feeling sleepy, you are bored, you are tired, you're having headache. You can exit a trade because of too many things. Do you understand? You don't believe in the trade anymore. Now, you shall exit the trade, and you come back 4 hours later, 1 day later, and you look at that your trade, and that your trade went in your direction. What you have is an entry point problem. Because the better the entry, the less concerned you'll be about the trade. Come to think of it.
Hi guys. Alright guys. Yeah. So giving you some cool background music. I hope you're enjoying it. But we'll just get started. Today we're going to be talking about continue from where we stopped. So we began to talk about strategy, analysis, and things like that. And I believe we stopped we explained trading style. Okay, so we talked about some. We'll come back here, and then we'll look at psychology. Now, this is a very rich material, so we'll look at trader psychology as well, and then we'll just break down. All right, so very quickly, let's just go to looking at the charts. All right, so first thing first, I want to know what's up with the markets this week. So I go on FX Street. Okay, I think there's a challenge with the network. Now, I hope you've opened your Infinex account with the link we sent you. It's very, very important. Alright, so I come on FX Street. Just hold on 1 second.
All right. So, so I'm on fxstreet.com. Okay, come to economic calendar. All right, so if I come to economic calendar, we don't have much news for Monday. So lots of the news that have happened. So we have, but we're seeing a couple of this, some news on euros and there's some news on NZD. So all right, so I will just quickly look at euro NZD, and from there. Okay. So instead of euro NZD, guys, let's look at NZD USD. Now the reason is because I don't have euro NZD and I don't want to start going through the stress of looking for it. So this NZD USD. So you can actually click here to make this disappear. You can click here to make this disappear. So come to H4, come to daily. Let's say we want to analyze this market. Now that's Control Y to demarcate the different days. So I'll start with my daily time frame and I want to understand what's going on with this market. So I first draw a structure up as the roof. So the above is the roof, and I can change it to blue. And then the next thing I do is I come down and I draw the floor. So I have my floor, and I have my roof. Now how do you draw these floors and roof? It's very easy. So from the high or the low to the close, so of the structure. So what do I mean? This is where the close is. Same thing for this place, from the high to the close. All right. So you can just use which one you feel comfortable. I am using this one in this situation. In this one, I would use this. I'm using this. Do you get? So I scale it down to H4. So on H4, same thing. I draw it from the close, from the high down. Same thing from the high to the close. Back on H1, same thing on H1. Now I can come on H4. I'm not going to use this. I'm just going to use this. Sorry. Alright, so I only use this on H4, and I'm using this and using this. Now this is my roof. This is my floor. My roof, my floor. So for this now, I'll use this, just this. So my roof, my floor. So I come to H1, same thing. I have my roof, and I have my floor. Alright, so I come to M30.
So why are you marking it all at a different time frame?
Yes, because I want to be able to adequately know my trend line.
Oh, okay.
Yes, I want to adequately know my trend line. So I have my floor, and I have my roof. H1. Now, so this is the downward trend. If I want to, I can come to my first roof, and I have located my downward trend. I can come to my floor, and I have located my upward trend. Or I can use H1 to do it. I can use H1 to do it. So if I'm using H1 to do it, I would come to my roof of my H1. If I want to use H1 to scale up, then, alright, and then, sorry guys for the background noise. I may have to make another video, but this will not be lost anyways. So I have drawn my upward trend and my downward trend, so which touches my different roofs and floors. Now, if, for example, peradventure, now this is a trade that has almost moved. Now, if, let's say, we didn't have this information, alright, so somewhere around here would have been my roof, right? I want to show you how I would have been able to know this move that happened earlier. Now this is right. Okay, so maybe somewhere here would have been my roof. Okay. That'd be my roof, right? Now it's very easy. I would have just set a structure that if it breaks downwards, I have my downward trend. If it breaks upwards, I have my upward trend. So I would have set my upward trend. Now, what happened? So basically, this market is in a place of indecision because the market is made up of ranges and trends. So we have a trend, we have a range, we have a trend, we have a range, we have a trend, we have a range. Now, this whole place here, you can notice that it's been a trend. So this whole box, if you look at this whole box from this place to this place. So the market hasn't decided where it wants to go, if it's breaking up or breaking down. So it hasn't decided if it's going up or going down. It is still yet to decide, even till now. And what makes you money in trading is trends, not ranges. Where you actually really make the big buck. Because with a range, you don't know what the market will decide. But with a trend, you know that okay, the bulls are in charge or the bears are in charge. So for example now, if I look at this market and it breaks this whole structure, I know that the bulls are in charge and it's coming here. If it breaks this whole structure, I know that the bears are in charge and it's coming here. So the boxes, the essence of the boxes is to help you know your entry and help you know your exit. So let's see if we can look at another market. Alright, so let's say we look at your AUD. Alright. So I'm gonna explain what I did again. Alright, so we have the roof and we have the floor, right? Roof, floor. Each floor. Roof, right? Now you must always draw your floor properly and your roof properly, unless it will take up too much space in. So for example, it's supposed to start from the high to the close. So you can see this is where it's supposed to be. Now I didn't draw it properly. Now you can also use here, but I don't think I should use here. I'll use just here because it broke the structure. So for me to take it up here, now this is the structure it is in now. Unless we're going to use daily time frame. Daily time frame, it's still within the structure of daily time frame. So let's see if we'll use daily time frame. See how the difference between daily and it's getting smaller on each one. Just take it out, it's stressing me. Hi guys, how are we doing? We're going into part 2 right now, and we'll go on FX streets. All right. Now, of course, there are a few pairs that already had analyzed, and I want us to look at those pairs very quickly. Now, one of the things I've come to notice about the market is that you have to be very patient. Patience is a virtue. So it's so important that you are patient. So because sometimes your movements will not be given immediately. They will happen as if you're able to wait for them to come to you. Alright? Okay, let's look at Euro CHF. First thing first, I want to draw my upper boundary or my roof. And then I want to draw my floor. Okay, and I come to H1. H1. So my floor, my roof. Alright, so then I can figure out my trend. Okay, so what we can see is that there's been a downward trend. A strong bearish move has been going on this pair, very strong, and you can even extend it. Now remember, your trend should always touch the highs. I said that earlier, it should always touch the highs. And so if I want to wait for this pair, what I would expect is for it to push up to the upside. Once it pushes up to the upside, and then a move downwards. So once there is a move downwards, then I can think of a break of structure. So that break of structure, now I know that, okay, I'm looking for buy opportunities. So I can start thinking of buy opportunities maybe up to this point. Now, of course, this is a whole lot of pips. So I can segment it into different options. So this can be my TP. So it breaks my structure, closes, hits my first take profit, hits my second take profit, hits my third take profit. So that's it. Voila. So once it breaks the structure, I now know that it has pushed up to the upside. Do you get? So best to wait for a trade to come to you than to rush in, you know? So yeah, that's a simple analysis on this Euro CHF. Now CHF pairs, as I said in part 1, is very interesting pairs to look out. You can always take advantage of CHF pairs. Okay, let me see if we can look at for a few more pairs, a few more things that we can look at. Maybe let's look at GU, pound USD. All right, let's see what's happening with pound USD. So pound USD. So if I come to H4, now remember Control Y is to segment. So I can mark my downtrend. Come to H4. Same thing. Market. can see already it's been giving us the idea of the direction it wants to go to. So if, for example, if I draw my downward trend from here, I can see that it has broken. So now, once it breaks the structure, I can officially know the direction that it's a bullish move, it's a bearish move to the downward side. So I can easily, now of course you can take advantage of the small moves. People do that, but the noise within the small moves are the issues. So if you would patiently wait for the big move, you would see more than if you are looking at the small move. So for example, now this is my take profit. I don't know if you get that. So it's my take profit. So if it breaks the structure, my take profit. So I can set, so if you notice I'm waiting for it. Once it breaks this whole structure, it closes below. Voila, I have my take profit. I have my entry and my take profit. Now, of course, for this situation, what am I risking? I can put my stop loss at the close prices. Now, what do I mean by the close prices? So if you look at these other structures here, these are a couple of this. I'm using this particular one there as my reaction point. That if the market gets there, it definitely means that the trade is not going in my direction. But if it breaks the structure and retests, it's definitely going in your direction. So my entry can be around here. Now, of course, it's reconfirmation entry in the sense that it has to break the structure and then come back to the structure. So it has to break and come back. So for example, break and come back, then go. So it breaks here, comes back, and then goes down. So the entry is at 335,493, and my stop loss is at 35,672. That's about 200 pips. And then my take profit is at... Alright guys, welcome. This is a 2-hour session class, and we're gonna get started. So the first thing first, I want to look at how I trade, right? Like what I do in my own trading system. Right? So the first thing I want to do is that I want to first know. Now there are some fundamentals are so important. Now I'm going to have a whole different subject on fundamentals. For now, I want everybody to look at something called CPI. CPI USA. And this is an important fundamental that I didn't mention earlier. So it's something that you always need to... So it's something that you need to also look at. Yesterday, there was a CPI news that took me out. I've always known about CPI, but I didn't know how important it was. And the market moves was mad yesterday. It took me out. Now, but in trading, you must always learn and know what your challenges are and things like that. Alright, so FX Street. I go on FX Street. I want to get a feel. Now, because we're entering, this video is being recorded in 2021. So we're entering a new year, which is 2022. And it's the best time to start the market is in January. So you want to be able to understand what has happened in the market from January to December, and you are entering the best time to enter the market, which is January. Knowing the news cycle, because there are usually like two cycles in trading. There is the first cycle, the early months where the market is booming. The later months, the market is not booming as much, and then the later part of the year where the market becomes invariably very slow. So, which is the festive periods. So, the first thing first I want to do. First thing first I want to do. I want to know what's been going on. So, for example, I can look at Monday because the market will be open on Monday and see what's been happening. So, on Monday, we have wholesale index, we have that's for euros, we have usually Mondays sometimes may not move very quickly. Tuesdays, Wednesdays, and Thursdays. Alright, guys, sorry about that. So, back to what we were talking about. So, we're looking at the best days. Let me show you. This is Investopedia. So you can see Mondays, the ratios. Okay, this is for the stock market. So some days, Mondays are usually Mondays generally are not always as fast as, because it's the beginning of the new week. So you can actually check it out for yourself. Mondays are usually not very fast days. So, for example, look at this news. This is for 13th of December. Look at the amount of news that are coming up on. See the amount of news that's coming up on Tuesday. It's more, right?
Yeah.
So if we check for the whole week, we say we're going to check for the whole week. Let's filter it. I'm going to check for the whole week. So if you check down, so I don't want to waste our time here. If you check down, you would notice that Wednesday will have more news, Thursday will have more news, and then Friday too can have a significant number of news as well. So, alright. Now the first thing first I want to do is I want to check what is going on in the markets. Now you must marry fundamentals with technicals. I'll say that again, you must marry fundamentals with technicals. Now, what I want everybody to do during the course of this course is to journey with me in 2022, because in 2022, I want to take a small account to millions of dollars. So, the essence of what I'm doing is I want to communicate my own system, my own strategy. You get this next period, you understand? Because trading is like development. Every day you're growing. So if the people I taught 8 months ago and people I teach today, I know more today than the people than what I taught 8 months ago. I don't know if you get what I'm saying. Yeah. So because I'm constantly entering trades, making successes, making some errors, making some failures. So also get a notepad to journal your trading. Journal your trading. If you don't journal your trading, you will not be successful. You have to journal your trading. You have to take trading like a business. You can't just take it like a hobby. If you really want to be successful in this, you have to take it like a business. You have to put in the time, And in the new year, it's part of what I want to really do. Put in so much time to become so good at my craft. All right. So the next thing we're looking at is I want to go on TradingView. So TradingView. On TradingView. Now, for now, we're not going to use any indicator. All right. We're not going to use any indicator for now. All right. So I've taken out all the indicators right now. No indicators right now. So let's say we want to analyze the market. So let's start with something interesting. Let's start with BTC because I have, okay, this is BNB, okay. Alright, so let's move away from crypto and come to Forex. And let's say we want to analyze. Now, another important thing I need you to do is have pairs that you are focused on. Alright, have some pairs that you want to focus on. So for the new year, I have 5 pairs that I want to focus on. As the year moves on, I'm going to eliminate those 5 and reduce the number to 2 pairs. You understand? So I want to focus on pairs that are correlating pairs. So pound USD, pound JPY, and those are the news I will look out for. Euro USD, Euro JPY. So these are the first 4 pairs I want to look out for, and then I also want to look out for gold. So these are my 5 pairs. The 5 pairs that I want to trade in 2022. So I want to give you like a small journal that you can work with. So you can have this like this. So trading journal. So these are the currency pairs that I want to trade. So I want to have an account for currencies. I'm giving you my secrets for 2022 when I become a millionaire in dollars. I want to have an account for CFDs. So what do I mean by CFDs? CFDs, things like US30 and NAS. Now remember with CFDs, what works is, which I already taught. I don't know if I taught this in this video, but what works with CFDs is our system. The system of trading for CFDs is moving averages. So smoothed moving average, $21 and $200, $21 and $200. You can also use 8 as well. You can use 8 as well, but so that you don't confuse yourself, you don't have too many, you can stick with 21 and 200. So 200 for higher time frames, 21 for lower time frames. So I want to trade CFDs as well, and then I want to trade cryptos. So this is a full financial plan. So I'm going to have a different account for cryptos. So maybe on Binance. Now the thing is that once you understand the system of trade, now with cryptos it is BTC centric. Alright, so I will trade BTC, USDT, ETC, ETH, USDT, and then maybe Cardona or something. But for now, I'm sure these two have a lot of volatility and volume on a daily basis. So this is my 2022 plan, and I'll go over this with you during the course of this class. So it's going to be quite a lengthy class. Alright, so let's start with our first. Now I'm not currently trading right now. This is why am I not currently trading. I'm not going to be trading from now to the end of the year because the market is very patchy right now. Now end of the year is not the best time to start trading. The reason is because all the people that made all the money have already cashed out. So it is just the people that just want to start making money, and so the market is always full of unusual numbers and things like that. Okay, so you have very volatile movements. Now in currencies, the thing I want to look out for first is technical, and then the next thing I want to look out for is fundamental. Alright, So let's start with fundamentals. So let's look out for the fundamentals of pound USD. All right. So I need to draw a table so that we can. So it's better. Okay, so I'm trying to set up the. I didn't come with my mouse. So fundamentals. So let's start with fundamentals. Now, what are the fundamentals to look out for in 2021 or 2022 for pound USD based on my several experiences every month? So let's start with fundamentals for January. All right. Now, very simple. I'm going to come to this thing. So let's look at what is going to be happening in January. And that's the interesting part of all these things are already there. So you can actually plan ahead. So this is 2022. So everything that's going to be going on in 2022, they've already told you about it. So you have from which is like today is 11th, so it has to be okay. So I don't think they have the news for 20. I think it's for 6 months. Okay, so this is weird. Okay, it's not applying. Let me see. Why is it not applying? Okay, let me. Okay, so why I'm trying to fix that, some important things you need to look out for, general things, is CPI, right? CPI, NFP, which happens every month, pound, BOE news, Fed news. So these are general things. Inflation, job rates, sudden news like the coronavirus news, Omicron, and things like that. So these are major things we need to look out for when it comes to pound USD. And the technical indicator, pure price action. So no, we're not using any indicators, we just use pure price action. And possibly we can use the moving average 8. So that it just gives us just some bearing of the market. All right, so let's go to trading view. Right. So the first pair we're looking at is pound USD. Pound USD. So pound USD, pound AUD, we'll choose any one of them. Yeah. Pound USD. First thing we're looking at. You can see my SL was smashed here. But first, let's delete every single drawing. And then we can come to Alright, so I want to look at the monthly time frame. So this is the monthly time frame. So we are trying to analyze the markets in view of next year. So first thing first, I want to draw this. Alright, that's a trend. So and then let's count. We have 1, 2, 3, 4, 5, 6, 7, 8. Alright, so you can count. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So we made a mistake. So the year started from somewhere around here. Oh no, I'm in the wrong. Yeah, sorry. We're in the wrong. So the year actually started from here. So I'm going to draw so we had the year started from here. So you have, this is December, so the next month is January. So this is where the months the year started from. So I have January, January 2021. Now I'm going to draw a level here. I'm going to draw a level here. So this was the high. So I can delete this now because I don't. Now this analysis, some of the analysis I'm going to do today is going to be life-changing for next year. So pay attention to this video. So I want to measure the high of the year. So this is the high of 2021. Alright. So the year started here. So I'm going to draw a trend from where the year started. Okay, I can just quickly delete this because that's not accurate. So let me draw. So the year started from here. And then, so now I can go to the weekly time frame. I'm trying to locate where the year started from. So you have January. Okay. So for March of last year, the market picked up. Market picked up from March. Wow. You see, imagine if you just bought here. So, because at the end of the year, the market does one thing. It's just your ability to analyze it properly. Analysis is king in trading. So, yeah, so this is the where the year started from. So let me put something. Put another thing here. So I know I have a box there. So let me change the color to yellow. Alright. Now I would have liked to do this whole thing in my own trading view, because what I'm doing today will stick in somebody else's trading view and not my own. So let me do it in my own. So we've not done a lot, so let me quickly log into my own trading view, because this is a company laptop. Okay. Is my access denied? Okay, so this is weird. So what's going on? Alright guys. Okay, everybody. So how is that? Alright, so what were we doing? Okay, so for general investing, remember deleting all objects. Alright. So officially the market has turned. Officially, the whole market turned yesterday. Alright, so yeah, so we just quickly do what we did in the other trading view. I said today's analysis will be live changing. So this was the high of last year. Of course, yeah, you can call it last year because 2021 is like in a matter of days will be over. So whatever you don't prepare for, you can't see. So if you don't prepare for success in 20, the reason you didn't do as much as you wanted to in the new year, in the previous year, this year, is because you didn't prepare for it. So if you prepare for the new year better, you would have a better result. So this was the high. You see, trading is not difficult. So you just did a double top and it dumped. Simple. So imagine if you had an order here, you would have eaten how many thousand pips. So this is something about, oh, that's mad, man. That's something like 10,000 pips. You know how much you would have made. Alright, so the year started somewhere around here. So I'm going to mark a horizontal line here. So it pushed up from where it started. It was a continuation. Now it has broken a structure. And what structure is this? This whole structure. So that's the structure it has broken. So basically this is the break, right? Now I'm going to do something. I'm going to start from here and I'm going to get to this place. Okay, so because I want to know where and what this market is going to do, I really want to know what the market is going to do generally. And from a higher time frame, you can actually know what the market is going to do. So if I mark the top, and I mark the bottom, and I marked the middle, so of course we can use the whole numbers. So we know that, okay. And then we can mark now. Key levels are going to be yellow. So all through the year, I'm going to make key levels yellow. Or let's say red. No, red is too common. What color should I use? Black. I think black is good. So my key levels will be black all through the year. So the next key level we're looking out for, if you put it in as a whole number, will be 29,000. That's the next key level. So of course it's possible you can break it. So you have from 29,000 to about 27,000, or we can use 28,000, or maybe 27,000. Okay, because we're using the upper and the lower limits. So those are the next key level we are watching. Key levels we are watching out for pound USD. So those are the TP levels. Now, what was what number did it start from the year? The low of the year was 355, and then the high of the year was like the low of the month, the very first month. So I'm going to mark this. So this was where the month started from. This whole 1 week, the whole 1 week candle. So the whole 1 week candle pushed up, broke this level. Now, from our simple system of break and retest, what do we think is going to happen? We expect the market to push back up, to come and retest this level, because it can't just keep coming down because of this level. So if we're looking at it, so how many weeks did it take to break that level? Because it was strong. It took 1, 2, 3, 4, 5. So the first 5 weeks, we can be thinking of a pushback, or maybe it's possible it can go 1 week, right? But we expect the market to push to this level. So let's do a quick. We expect the market to push to this level and then slide down to this level. So this is our general bias for probably the first 6 months in 2022. You see how easy it is. Now, but between that level, so I can mark this level. Because it's 1, 2, 3, 4. Yeah, this is, I expect it to. So between that level, so what did I just do now? So usually in a reversal, there is always 4 candlesticks after it. So what do I mean by this? So for example, this is a break, this is a leg 1, this is a leg. So what do I mean? Alright, so the market moves in things like this. The market moves like this, right? Alright, so a reversal is a pullback. This is a pullback. This is another pullback. This is a pullback. This is another pullback. So this is called leg 1, leg 2. Your entry is usually on leg 2. Now, okay, let me explain. This is just takes me to a strategy I used to use a long time ago. It's called reversal strategy. It's the first strategy I ever knew in Forex. So the market pushes like this, right? From a place of support, comes down, then pushes up again, pushes down, pushes up again, pushes down, pushes up again. So a reversal has one. This is actually my book. 1, 2, 3, 4. So this is a reversal. So pushes, comes back. This place is called a leg 1. It breaks out. It breaks now. It's not a reversal if this is a pullback. So breaks. This is a pullback. Until it breaks, it's still not a reversal. Now imagine if this was a downtrend. This was a downtrend, all right, and then it pushes up. Now this doesn't mean that it's a reversal. It could be a continuation of the downtrend. So it pushes up, gives a pullback. If it comes back to this level, it means that it's invalidated. So if it pushes back up, this is called a leg 1. It breaks it. This is called a leg 2. Your entry should be on your leg 2. So where should your entry be? Above. So once it breaks and it comes up, this should be your entry. So you can have your entry. You have your entry somewhere around here. This will be where your entry is. That will be your take profits. And your stop loss is above the leg. Your stop loss is above the leg. So this is what we call reversal. So you have leg 1, leg 2. Now there's also another analysis, which is trend analysis, but I think I'm going to stop using this because there are lots of fake outs in currencies with this. It's not always too accurate. It's not as accurate as as I would want it to be. So this is where your entry will be, and this is your exit at the exhaustion. So there's also another type of, which is 3 touches. So in a trend, so it comes in, breaks, comes in, comes in. But I'm going to stop using this analysis because sometimes it can fake out. Because currencies can be very weird. It can fake out like this. Do you understand? It can fake out, or it can fake out, come back here, hit your stop loss. Do you see? And then come into the trend again. Yeah, it can happen like that in currency. So this form of entry, I won't advise it in the new year, but it's still a valid entry. It's still a valid system that traders use. Still a very, very, very valid system that traders use. Remember, no system is 100% correct. It's all about money management. So this is what I expect from GU this year, right? It seems very easy, but inside this move is a lot. So I expect it to retest to this place. So it's your ability to catch it. I expect it to retest to this place, to where the year started. It's possible that it could retest back to January. So January, the first, I'm also in the market line here because this was the low of the year. Do you know why I say that? Because this is where the year started from. This is the next tick it formed. So this was the low of 2021, right? When it comes to the start of the year, actually we are actually in the low, but this is where the year started, the very low of where the year started, pushed up. It now broke it. Can you see when it came into that place, there was a rejection? Can you see? There was a serious rejection. So you can also be rest assured that if it comes back, if the year closes like this, and this is the low, once it comes back to this place, it will reject. Because high of the year, high of the day, all of those places, all highs and lows, there are rejection places. All highs and lows are rejection places. Alright. So okay. So the markets came in here, rejected, came in here, and then it broke it. Closed on top of it and broke it. Found 1, 2, 3. So it's chances that it's coming to retest this whole place. It's coming to retest this number. So I can add a text. So start of 2021. What price is it? 1.34598. Make it a bit bold. Upward movement to the start of 2021. So okay, so this is what I expect for current situation. So I'm thinking that this should be, yeah, this should be, I don't expect any other thing to happen below this place down. I don't expect. So because the US economy is really bad because of the inflation rates numbers that came out. So I don't expect to break that number. So these are okay. Now, of course, this is very easy from a standpoint that okay, market will move up to that place, and and then it will reject from there and things like that. So you can actually see how easy it is. But now it is now finding entry as a intraday trader. It's now being able to find entry. Now being able to find an entry as an intraday. So I think we can also even set an alert, because it's something that people don't usually do. Anytime you have an important number, set an alert. Do you understand? Because you may forget, and that's an opportunity that you may forget. It has happened to me several times. I had a number there, but I missed out. So I'm going to set an alert there. Then of course notify and things like that. I think crossing is okay. So we currently now have an alert there. Once price gets there, it will activate. Now the thing is, how do we take advantage of it between there? Because between where it is in 32,675 and 34, our number is 34. So you have 1.34598 minus 1.32675. You have 1,928 pips That can change your life. Okay, so how do we take advantage of it between there and there? Now, of course, I would quickly draw a channel. This is a channel. A channel is a place price is constantly reacting off. That's what a channel is. So if you look at this, now, from when price entered into this, I'm trying to draw it accurately. It's not looking. So price came into this place, reacted. Okay. Now, let me shock you with something. If I add a moving average, okay, so there's something wrong with this channel I need to figure out. Okay, so maybe I can start from here. Okay, it's supposed to touch at least 3 places. So let's check something. How to draw a channel accurately. How to draw a channel. Now, of course, if you forget how to do something, you can always Google it. Okay, so let me see if I can do it quick. That's too long. Because I don't understand what that guy is saying. Introduction. See, this is for dummies. In the trading chart, you have drawn up, connect the 2 lows at the lower left. Okay, this is support, but there are 2 relative lows because the bar with a higher, with your ruler, extend the line into the future, extend the resistance. Okay, I think I get it now. So, okay, so this is why we're having an issue. So, they say in the trading chart you have drawn up, connect the 2 lows at the lower left. So the 2 lows at the lower left. Okay, so this is the 2 lows at the lower left. Okay. Alright, and then they say there are 2. So connect the 2 lows at the lower left. This is the support line. Alright. 2 lows at the lower left. There are 2 relative lows because the bar with a higher low comes in between, which you rely extend the line into the future. You can also extend the line through the magic of software if you feel like drawing. To form the top channel, go back to the highest high and start a line called the resistance. So I'm supposed to start with the support, right? And then Okay, I now understand what the problem is. It has actually broken the channel. I'm trying to make the channel fit. Oh, okay, yeah, it actually has broken the channel. You see, so that's why you have to look at the market accurately, because it's so weird how the same thing happens in Forex every single time, but people are not able to take advantage of it. It's like, it's super weird. Can you see the way it has been respecting this line? Okay, so this is that's the support. You can see from our number. Wow. So now I need to draw it accurately from the resistance. Okay, does it look accurate? I think we should use this. Okay, so this is the resistance. So it's now accurate. So this was the support. This was now the resistance, because it came into this place and broke out. So it came into this place, entered. So this was now the new support. Does it look accurate? Yes, I think it does look accurate. There was a major fake out here. So it has broken. It has broken. It has broken our trend, right? So not necessarily any support. So what should you be thinking about? You're quick to say buyers. Actually, you shouldn't be thinking about anything right now, because it didn't really break it so well. The next place you should be thinking about is around here, so you could just retest back into the trend. So alright guys, we're back. Okay, where were we? Now that's pound USD, so let's look at pound JPY. Pound JPY. Okay, so pound JPY. So what's the first thing we want to look at? What's the first thing I did? That's the first thing I did when I started analysis. I wanted to see what happened this year. So the first thing I did is I located January. So that's January, right? I want to know what happened this year. So you can see this year, this is what happened this year. This is incredible. Somebody's supposed to buy these markets now. If you buy it here and you keep it around here, that's a whole lot of pips. If you buy it here, 131, it's not so much, huh? It's like 700 pips. So the year started here. Okay. And then guys, I'm going to add one exotic pair. One exotic pair. Chief JPY. Chief JPY. So this is where the year started. Alright, so January. So I want to mark. You can actually also sell the markers. If it breaks this place, it could sell. So I'm going to mark from this point where it is, because it's been a major resistance. So this point. So upper level of it. Then let's go for the upper boundary, lower boundary. Okay, so the year started here. So I want to look. This is the way the year started. So it actually broke structure, and then it came back to retest. This is the all-time high of the year. Okay, so let me change the feel of this thing. I just feel the color is weird. It's too thick. It's better. Let me use Alright guys, so I actually changed that number. So why is it doing that? So I'm using 156. So whole number 156. 156. I'm using a whole number here. I thought I changed. Okay. Okay, this was where the year started from. So let me. Now I use my data range and I divide. I want to know. Now, can you just notice something? Did you notice something?
At the middle.
It's just exactly at the middle. That's amazing. Exactly at the middle. I mean, there's no need to change anything. Like I feel there's something that's gone wrong with this thing. It's not the way I used to like it. for me, what I'm saying is a continuation of bias. That's what I'm saying. A continuation of bias to the upside. That's what I am saying. Yeah. But there are several factors. There are several things that can happen. There are several things that can happen. So let's know exactly where did he reject from. So let's see. Because you can see there was a sharp, as though there was a sharp rejection on the weekly time frame. There was a sharp rejection. Let me take this out. So that's where the rejection happened. And see it broke. Now, someone can easily say buy from here and go up. But what if it's a continuation down because the pressure is down? You see? The pressure is down. Because there's bulls and there's bears. Do you understand? So the market is always made up of bulls versus bears. So it's your ability to know who is in control of the market at a point in time. That's what will make you successful. So, because on a daily time frame, for example, this is a. Okay, let's try to use a channel to see if we can figure it out. Okay. So, but this is February 2018. You see, rejected from 2 years ago. So this is actually a very strong resistance. Like it's not a joking resistance at all. You can extend it to as way back as 2011. So in a way, you can see A, B, C sold. It's coming back to C. So chances are it's possible that it can sell. It's possible. It's possible that it can sell over a long period of time. And this is the dead touch. It's possible it can sell. It's possible it can sell. Because from 2009, 2007 it dropped, pushed up, 2009, pushed back up into this thing, and then it pushed to 2017, hits this resistance. It's also a strong resistance because it's been there since 08. Let me see. So this is actually the strongest resistance it has had. It hasn't broken this level in years. It hasn't broken this level in years. So can you see that if I was here and I do this, I would be able to sell this market? It hasn't broken that level in years. The bears are stronger than the bulls in this market over a long-term period. That's why it dematerialized like this. So what we can do, so this is where the year started from, 2021. This was the all-time high of 21, came back, rejected. Now it's now a year. Now it's 2022 can be a continuation up to the upside, and then But anything we're going to do, we should wait for the trend. So if it breaks the trend, comes back into the trend, we can sell. So what we can do is simply keep a box from the trend to the downside, and then from the trend to the upside. That's what we can do. That's the only clear bias I have on this market. Because anything you're trying to do here will be predictive. You're just simply gambling. Because if you say, okay, it's going to sell, okay, because it's 1, 2, 3. I told you that 3 touched something. Sometimes it could reject back to this place, it could come back into the trend, but once it breaks structure, it has broken structure. So I think this is the best thing I think of doing with this pair. I can't think of any other thing else. I'm waiting for it to come. But I expect it. I'm more in favor of sellers than buyers. I would think more of the sellers than the buyers. So let's look at a lower time frame. There's a whole lot weeks after weeks. So it's sold, it bought. Like this is a ranging market, no clear direction. So you can see from here, and it's not like we can draw a channel. There's no channel that is showing anything. There was a channel here. There's another channel. So it's just breaking structure, coming into structure. But let's use, what did we say would happen with GU, because GU is and GG are kind of intermediary. So I can think in that direction and say, okay, within the space. So I can think within the space. Let me see if I can find a trend. So I need to find a good place of support. So we found a small channel. So bounced up, bounced up, bounced up. So we just have to, something we can take advantage of. That's the channel within. So once it comes into the channel, that's something we can think of selling down back into the, do you understand? The uptrend. So we would have to wait for it, because it could take 1 week before this happens. So it could take between now and the end of the year. before we can sell. So the downtrend could continue, and it's the same thing with GU. There will be first an uptrend, and then the downtrend will continue. You see they are almost, so there will be an uptrend down here, the downtrend will continue. But there is no clear direction and clear entry for the downtrend. It's not like there was a major, if there was a major stick that, then, so I can just mark this level. Mark this level. I can actually just mark this level. Maybe just, yeah. Up for one more analysis. Okay, so that pair we're looking at. Okay, so the next pair we're going to look at is Euro USD, guys. Euro USD. And then we'll look cheap JPY. We'll just look for cheap JPY, an exotic pair, and just hold. Now, the thing is that, the truth of the matter, you see these pairs, these major pairs, they are not very difficult to analyze. I used to always think they were. They are not. They just follow structure. They actually do follow structure. The issue is that people pay attention to the noise. Do you get the various noise that happen? So this was January, came in, broke out. So it's clear. So let me draw my data range. So I think I would prefer to use this level down to this level. Now, guys, there's something I said earlier, and I felt I didn't explain it well. So, if a market comes and moves, and you want to catch this move. Let's say you missed it. You missed it from here. All right. So you were not able to catch it. What you do with the fib? This is the fib strategy. You come to the lowest point, and you take it up. Sorry. So you come to the lowest point, and you take it to the highest point. So, can you see? You just touched the neckline. It's so weird how accurate fib is. So, if it comes back into this structure, the 61 and 70, 78.16, that's an entry. The 100 is your SL. Your TP starts from 0. Your TP starts from 0. Your TP starts from 0, from 100. Yeah, from 0 to 27 and the rest. So I wanted to just explain that again. Okay, so this is it. Okay, so I can come to lower time frames so that I know what's up, what's going on with. Okay, this data level is too big. So I can come to the daily time frame to know what's up. So the markets came in from here. So that was 2021, so January. This was January, right? Okay, so I wanted to know what January was. This was where January was. So it came into this, came back to that level and shut down. Now I want to show you something. Market came from this level. This was 2020. I'm looking for 2020. So 2020. So the market came into this level, came down. Now once the market came back to the previous level, it rejected. So it's something that I want you to always notice. So the market came into this level. Once it came back to that level, it rejected. It rejected, broke the trend, retraced on the trend. Retraced on the trend, and then it dematerialized very nicely. So what can we do at this point in time? Okay, so we can draw a trend, another trend. me see a channel. Okay, this channel is very inaccurate. It's supposed to be from here. Okay, Euro USD has no channel that I can look out for. This is what you call a free falling market that has refused to give entry. Okay, so what I expected is possible it could fall down, but it rejected at this level. This here. That was the best rejection this year. Okay, so this is ABC. We sold, came in. I don't know what this is. This is ABC, sold. This is ABC. This was week 1. Came in to rejection. Came into, if there's rejections around here, again, something you can take that. You can see rejections around here. See, came in. This is how many days? 1, 2, 3. Between 12th to 25th. This is 3 days. 25th to December. Another 5 days. Rejections. Came in. Came down. So you can see this is a very strong point that you can look out for. So you can still think of sellers. Alright, that's it guys. We'll just take a break now and then we'll come back.